as mentioned before, my name is Bjarke Smith-Meyer. I'm the FinTech correspondent at POLITICO. And I'm back again to talk about the digital euro and central bank digital currencies. And I understand that it's a little bit of a heavy topic, especially after a lunch, but we'll try to make it as entertaining for you as possible. And thank God I have amazing panelists with me to help achieve that. For one, I will first just introduce the people here in the room with me. From Ripple, we have Susan Friedman, who is the head of public policy. And then from Deutsche Bank, we have Alexander Bechtel. Hopefully I pronounced that okay.
Perfect.
Excellent, good. Who is the head of digital asset and currency strategy, as mentioned in Deutsche Bank. Online, I have the pleasure of introducing, first I think from Frankfurt, but tell me, Heike, if that's wrong. But Heike Winter is calling in from, I'm assuming, the Bundesbank. And she is dealing with retail payment policy at the German Bundesbank. And then I don't know if you're calling in from Madrid, Oriol, or you're calling in from Asia, but you can tell me.
I'm in Barcelona right now, in Barcelona, in Spain.
Oh,
right
wonderful.
Now.
Okay, great. No, that's a very luxurious place to call in from. So we have Oriol Caudevilla, who is the co-leader of the Financial Inclusion and CBDC's working group at Global Impact in FinTech Forum. Ladies and gentlemen, please give my panelists a round of applause so they feel nice and welcome. Thank you very much. Okay, I think a lot of people have different understandings of what a central bank digital currency actually is. So I think that probably a good way of setting the scene is to actually just discuss what it is actually we're talking about. And I'm very happy that we have a central banker then in the room in Heike. Heike, can you just tell us what is the digital euro and also why do we need it?
Yes, thank you, Bjarke. Yes, I'm talking from Frankfurt. The skyline is behind me, but you can see here only my white wall. So, digital euro, what is it? To make it short, I can say it's something. It should be something like a digital cash, and we see there's a need to. We see increasing digitalization everywhere. If you look around, buying a train ticket is now more or less always digital. This vaccination certificate, which we have, is digital. Smartphone payments are growing everywhere. So digitalization is the background. And for that reason, as a central bank, we have to think about what shall we do with our central bank money, which is available for the public up to now only in a physical form, in cash form, and we have to think, isn't it worthwhile to make it digital? And that is what we are doing. A lot of other central banks are also busy with the topic as well. In Europe, we have the special situation that we think it would be also help to safeguard our sovereignty in that way that we will have then a real European infrastructure on which payments can be run.
You mentioned the big tag word there, sovereignty. I mean, I'd like to know a little bit, dig into this, why it is that we actually need the digital euro. I mean, I have to admit, I wasn't necessarily deep in the crowd in the mid-10s, but the first time I started hearing central bankers talking about a central bank digital currency was after Facebook tried and failed to introduce its own virtual currency that was, well, at least born Libra and died Diem. But I'm curious, I mean, is this clearly just a defensive move?
To correct you slightly, the discussion about CBDC is a little bit other than the Facebook move with Libra. That was in 2019, and as far as I remember, we had some talks about that. I think in 2016, 15 and 16, I think it started. But more might be as an abstract matter, but in one way you're right. It's whether it's defensive or offensive is the question, but it was a little bit a push from policy to start with something. They said we don't want Facebook in there as the issuer of a digital currency, and Facebook in those days proclaimed they will offer something like a digital currency. we would like to see our currency digital. That was the way I think Olaf Scholz in those times, Minister of Finance in Germany, and Bruno Le Maire, Minister from France, had in their head, and they convinced, I think, the rest of the Ministry of Finances in Europe that there should be perhaps something like that, and then it started. Yes.
I just want to put one final question to you on trying to explain exactly what a digital euro or a CBDC is. Most people, when I speak to them on the streets, they're immediately saying, well, on my banking app, I already have a digital euro. Could you just explain the difference between what it is that I see on my banking app and what it is that you're talking about?
Yes, this is a little bit of economics, I think. This one, what you have in your hands as cash and what banks have on their account with the central bank. This is central bank money, and the liability is with the central bank. And when you have a bank on your commercial bank account, then it is commercial bank money, and the liability is with your commercial bank. And as you might be familiar with, it can happen that there can be something like a bankrupt of commercial banks, and in that, for that reason, it's not as safe as the central bank money is.
Great. Okay. So basically, I could say it's a central bank backed digital currency as opposed to the commercial money that we have on our iPhones or our banking apps. Oriol, I'm going to come to you in Barcelona. I mean, as Heike mentioned, it's not just the Eurozone that's exploring central bank digital currencies. It's also in other countries. China, for one, is in the lead. Can you just give us a sense of how far they are in developing a digital yuan?
Yes, of course. Well, China actually launched a digital yuan earlier this year in January. I know that it's usually said that China is leading the race, but to be honest, China is like maybe the one of the world's major economies, or maybe should I say the first one in the world amongst the major economies in launching a CBDC. However, they didn't win this race, to put it this way. I mean, other countries came first. The Bahamas in the Caribbean, for example, launched their CBDC, the Sand Dollar, back in October 2020. And there were other countries, for example, the Bank of the Eastern Caribbean launched as well a CBDC a while ago. Nigeria last September launched their Naira, which is a very interesting CBDC, of course, because it can address financial inclusion, even though it had a bumpy ride for technical reasons. But as you can see, China didn't come first, but we usually say that China is winning this race because China is the first one amongst the major economies in having worked on and launched their CBDC. China actually started to work on their CBDC digital yuan back in 2014. They spent 6 years doing research on this topic from 2014 until April and May 2020. And it was then in April and May 2020, just after the pandemic started, when they started to do the actual tests throughout the country. They started by testing small amounts of digital yuan transactions involving a small amount of citizens, and then they kept increasing the amounts of those tests gradually. They did also those massive lotteries or giveaways in certain districts in Shenzhen and other cities. So it was quite interesting actually to follow up their tests. But bottom line is they kept doing these tests to the point that this year in January they finally launched the app, the digital yuan app, on Android and iOS, and they also used the Winter Olympic Games in Beijing to test digital yuan for cross-border payments. Even though I must say that those tests felt maybe a bit incomplete to me in the sense that, as you know, the Winter Olympic Games didn't host as many people as expected because of China's zero COVID approach to the pandemic. So this is why, to me, those tests were, of course, interesting. The amount of transactions in digital yuan beat up those in Visa by far, but still, I think that maybe perhaps there was not enough people. But the idea is that one. And since then, it's been rolled out in more cities, involving more people. to the point that, as per the latest data I have from June, more than 260 million people in China were already using the digital yuan, totalizing their transactions more than 14 billion US dollars, and it's available to be used in over 23 cities in mainland China and 9 wallets. That being said, China is not the only country in Asia working on CBDCs. There are many CBDC projects or realities in Asia.
And one of them is in the US. And I will come to you in a minute, Alex, to kind of get the sort of industry take on all this. But I mean, Susan, maybe you can help enlighten us. Like, where is the US on this? I mean, they seem a little bit more chill about this than the European Central Bank is, for example.
I think that I wouldn't say that they are chill. I think there is always, and this is a constant topic of conversation, the primacy of the US dollar, how that would balance out in the face of a digital euro. I will say that the development of a digital dollar was a focus of President Biden's executive order, the study of it. I think all the executive branch agencies in Congress are taking that very seriously. And the Chair Powell has been very clear that no one is rushing to issue a digital dollar. That would require an act of Congress to begin with. But I think they are taking the time to really study it. They understand that there are concerns about privacy, identity, stability. How do you prevent the disintermediation of banks? And they are doing the work that they feel that they need to in order to determine whether or not a digital dollar makes sense. And that, I think, is what we're seeing both in the EU and globally with the G7 economies.
And we'll come to all of those points. But Alex, I mean, from the bank's point of view, I mean, this is a lot more money for you to play with. You must be thrilled, no?
Okay, so maybe first a disclaimer, I'm not talking for the whole European banking industry today, so most of this will be my own opinion, but I can give you a bit of an insight into the sentiment I at least have experienced over the last years when it comes to CBDC and banks. I mean, until now, we have talked mainly about retail CBDCs, and that's, of course, something that concerns banks. There, of course, I mean, first, probably banks are very happy that the ECB over and over makes it very clear that even a retail CBDC is a public-private partnership, so banks are important. Banks are going to play a role. The ECB will not be able to offer 300 million user accounts to the end users in Europe, so this will be a role for the banks. But I think there are mainly two concerns across banks. One is for sure, what's going to happen with us? Are we going to be disintermediated? So will we suffer from this because now everyone is using CBDC instead of our money, the bank deposits? And I think the second concern many banks have, and we have been discussing heavily over the last months, is what's actually the value add of a digital euro? I mean, you've already asked, I already have digital money on my phone, in my bank account. And in particular, from an end user perspective, I think there are a couple of reasons why the ECB would want to issue a retail CBDC. But from an end user's perspective, I won't convince an end user by explaining him or her, you have a different form of money now and maybe a little bit less credit risk. I mean, I think no one is interested in that. What you want to have as an end user is I want to have additional features. I want to be able to do stuff with this new money, which I cannot do today. I won't use it if it's the fifth checkout method at Amazon next to 4 that are already working well. So that's a bit one concern we have, because we, of course, want to become part of that system. We probably have to invest. We're going to build applications for end users. So we really want to make sure that there is a use for this digital euro.
Yeah, no, I mean, you mentioned wholesale there for a second. And it's not the first time I've heard investment bankers talk about, the fact that the wholesale CBDC or digital euro would be great to have. Can you just help us understand what's the difference and how would it be more helpful?
Yeah. So a retail CBDC, it's often commingled, but a retail CBDC as a first step has nothing to do with blockchain. A retail CBDC simply means the central bank is offering a digital version of its own money. A wholesale CBDC is something you could say already exists today. I mean, banks already have reserve accounts at the central bank, and this is now really a purely technical discussion, because wholesale CBDC means, should we offer these reserves that already exist today as a token on a blockchain? And I think banks agree widely that this is something we definitely need, because there are some immediate use cases we would need this form of money for. One example is, for instance, what we are observing today is that more and more assets are being represented on a blockchain as a token, being a real estate token, security token, and so on. If you want to trade these assets, ideally you also need money in the same ecosystem, which means if you have the asset on-chain, you also need the money on-chain. Now, today in capital markets, we are using these reserves at the central bank as a settlement asset. If we're now taking the securities and putting them on a blockchain, we also should put the reserves on the blockchain in order to basically have the same ecosystem. So we need tokenized central bank money on a blockchain as a settlement asset for cross-border payments, maybe in order to make these tokenized deposits that we have heard before come to life. These are reasons why we need wholesale CBDCs as banks.
Well, with that, I'll go right back to Heike. Heike, I mean, you heard it there. I mean, the retail probably creates more problems than it does solutions, and the wholesale is probably what would probably be the great thing. Can you enlighten us? Is that in any of the plans that you guys are considering in the Eurosystem?
Yes, we are aware that there's also some need of wholesale CBDC or a way to have this on-chain settlement on a token. When you have on the one hand a token-based security, and on the one hand there should be the money. This is something we have to prepare to handle that, but there are various solutions, and we see also others, not only wholesale CBDC as such. There could be also some bridge solutions to the target system, for example, for our gross settlement in the Eurosystem. This would be an alternative. At the moment, we are talking about this internally to make us our mind, but you can discuss it. But nevertheless, it started in Europe with a push. Let's make something for retail, and that was triggered, as you pointed it out before, by that move of Facebook in those days. And I think it's not, is there, let's say, the third, fifth, or seventh method to pay in the internet. It will be something new, because, and that we have to convince the end users, that's for sure. And that we need also the commercial banks and other payment service providers to support us in that. But there are good reasons for the end user. For example, if you look on data, you focus on data privacy, then this will be something where you don't have to share your data with other companies, as it is the case in many of those offerings we have at the market now. This would be one reason.
We'll definitely
not
get in.
Only the safety.
No, we'll definitely get into the privacy debate. But I mean, I guess Heike answered your question in some way, Alex. I mean, retail is the focus, wholesale isn't. Maybe it's something for the future. But I mean, it's not so often that you have, this is a virtual platform in some case, but you have the ability here to really articulate some of the concerns here that the banking industry has to a central banker. I mean, maybe you can just help us in the audience and here, help me understand, why are banks so worried that creating a central bank digital currency could take away their deposits business, for instance? Why is that such a concern?
So I think it's important to understand that the central bank is not a market player. So it's not like a level playing field. And the central bank, theoretically, of course, it will never do that. But theoretically, it could create something that kicks all the banks out of the market. So that's, of course, just to make it clear what the scene looks like. Of course, as I said, central bank is never going to do that. They have over and over made it very clear that this is a partnership between banks and central banks. Nevertheless, if we agree that we are going to have something like a digital euro, this won't be additional money. So it's not coming out of nowhere and we're all going to be richer, but this has to come from somewhere. It might partially be that we convert cash into the digital euro. This will not concern us as banks, but it will definitely also happen that we convert our bank deposits into the digital euro. And this is exactly then where it gets interesting for banks, because customer deposits are, of course, an important source of funding for banks. And we somehow need to find a way to avoid having, for instance, digital bank runs, where in a very short amount of time, banks lose massive amount of deposits, let's say in a crisis, for instance.
That's a click of a button.
With a click of a button, right? In a crisis, you could say, okay, even though my bank is probably doing well, but I'm super cautious, and there is another bank which is in trouble, I'm also taking the money away from my bank. And this could create kind of self-fulfilling prophecies, and these are dangerous. I'm less concerned, to be honest, about the, let's say, structural disintermediation, in the sense that we're now going to have a little bit of central bank CBDC, and we're going to have bank deposits and other things. I'm more concerned about these sunspot events. So during a crisis, that within seconds you basically can destroy the banking sector because you can pull away all your money.
Yeah.
So that's one dimension of disintermediation, the balance sheet and the funding for banks. And the second one, which is important as well, is the payments, the disintermediation at the payments front, because what banks...
Just to close the lending loop, I mean, so if I as a banker have suddenly seen fewer deposits arriving in my bank, then how does that affect my loan book?
So it's all about, so if we hand out a credit, we have to refinance that credit, and this has to come from somewhere. A nice way of doing it is just using deposits, because deposits are a very stable way of funding your balance sheet. If we do not have deposits, we would, for instance, have to go to the central bank and borrow money from the central bank, which might be a bit more expensive, for instance, and it just gets a bit, you could say it gets more expensive for us to refund our balance sheet. So it's a cost thing. First and foremost.
Okay, yeah. And then you were saying on payments.
Exactly. So the payments thing is, of course, if now people start paying most of their bills with a digital euro, with a CBDC, banks will probably only partially be part of that. To be determined which role exactly banks are going to play here. Today, of course, banks are offering, among others, payment services, and of course, we are collecting payment fees for that. That's the first point. And secondly, we're also collecting payment data. And both is an asset for us. And losing that, of course, would be another issue.
Right, okay. We've touched on privacy a little bit. I mean, there have been consultations by the European Central Bank and the European Commission, and privacy has been highlighted as a concern that you might be giving up your payment data to central bankers or authorities, and that's been a prevalent debate. I mean, if you know what it is that people are buying, you know a lot about their lifestyle. Has this debate kind of been a big thing in the US as well, Susan?
I think absolutely. I think globally. And Chair Powell has said, or did say at one point, that he expects that any digital dollar would be private but not anonymous, which in a lot of ways tracks with what happens today. If I go and open a bank account, there's a degree of KYC that's done to make sure that I am who I say I am. I think what's interesting is, I mean, the devil's in the details, and the question is, how do you get that calibration right? There's an argument, if you look at blockchains, all of the transactions on a blockchain are public. You can see what is happening, and it is true that we don't want any government to know if I'm going into a grocery store, what I'm buying on a given day, and the like. But I do think that there is a way to calibrate a digital dollar, a digital euro, so that you are identifying who is using it, but not necessarily tracking every activity, which frankly, I don't think is the intent of any governmental entity that I have heard of, save for one potentially large one. And I don't think that the US is looking to track that model.
Oriol, how did the privacy debate play out in China?
Well, I mean, I would say that this is a global debate. I mean, this debate has played out all over the world. I know that perhaps sometimes, I would say that I feel like this debate may be more intense in the West, but it doesn't mean, though, that it doesn't exist in Asia, or more specifically in China. I would say when it comes to China that, the idea of the digital yuan is pretty much what Susan said now for the digital US dollar, in the sense that it's going to be private but not anonymous. The People's Bank of China, which is China's central bank, as you know, mentioned several times, last time it was in July, that limited anonymity is going to be a key feature of digital yuan, and people need not to be worried about that. I think, though, this is a very tricky topic in general, in the sense that we all know, for example, that data privacy is not the same as anonymity, and data privacy regulations and ordinances do not necessarily protect anonymity in general. I'm talking about from a global perspective. So this is a very tricky topic worldwide. But I would say this is not seen such as a risk in China. China, for example, and this is actually very interesting, they passed a privacy law, I think it was 1.5 years ago, which is actually, to some extent, some parts are a bit of a copy, and they were quite inspired by GDPR. Their law is called PIPL, Personal Information Protection Law. And as I said, their standard of protection is actually very high, comparable to that of GDPR, even though, of course, there are differences between GDPR and PIPL when it comes to extraterritorial application or some other elements that I'm not going to cover now because they're maybe like too technical from a legal perspective. But still, I would say that this debate exists in Asia as well, also in China, but I don't think this should be a big concern anywhere because the goal of central banks, generally speaking, I mean, it shouldn't be, and it's not that of controlling their citizens or anything like that.
Okay, well, let's put our central banker to the sword. Heike, are you going to be looking at our payments?
Yes, the whole privacy topic and payments, as Alex pointed out, for the banks, payments are also a source for fees and also a source for data. When we think about a digital euro, we think about privacy in that way that it should be private in that sense as now a commercial bank transaction is now. It will be traceable for the commercial bank and for the person who started it, the account holder. And this is something that shouldn't change with the digital euro. What's about the fees and who will pay for the whole digital euro? That is at the moment, that's a really delicate topic, I have to admit. And we are thinking about business models, how that can work. But we think it should be also in a way that it's also some, that it will be of value also for the banks. That is the idea. The details are not worked out yet, but we are we are doing this work. We are working on it. That's it. What else was it about?
I mean, I'm curious.
Anonymity is something that is not that is possible when you do things digitally, because with physical cash that works sometimes too well. And yes, and there will be, and that won't be possible. And we think about having that it shouldn't be that all the data will be stored within the central banks. But this is not technically worked out how that will be organized, but that is the goal we have.
But you could say confidently now that privacy does not mean anonymity.
Yes, that is for sure.
And so what would that mean then?
But it's
practically
also
speaking?
a bank transaction now is also not anonym.
So what would that mean? Would that mean that if I was onboarding in order to then get hold of some digital euros, that I would have to give up some of my identity?
Yes, you will. The idea is that you will be a client of a commercial bank, and then you have to identify yourself as you always do it for anti-money laundering reasons. And also, yes, the bank also would like to have your data to make sure who you are and from whom they will get their fees. And this would be the same way and then they will offer you the digital euro.
Okay.
That is the idea.
So basically, if you're a drug dealer, don't use the digital euro. But I was going to jump over here. Just because I saw Alex first. Then
Yeah. So I just have to say I'm wearing a different hat now because I'm also still a researcher at the University of St. Gallen, and I've written a paper with a couple of colleagues on how to enable privacy or even anonymity for a digital euro. And I mean, first I have to say I actually like the approach of the ECB at the moment, because I think that's sensible to say let's do something we already know, we implement here a new system. And what they did is basically, or at least the latest suggestion is, everything will be as today. You are going to interact with your bank. Your bank knows your data as well as it knows it today, and that's it. However, my vision of it, or if I had a wish, I would say let's design the digital euro in a way that it really transfers the characteristics of physical cash into the digital world. And I mentioned before what could be a value add of the digital euro. Why would people want to use it? And I think this might be one reason. Today we have cash. If we want to make a fully anonymous payment, why not trying to do the same with the digital euro in the future? And what we have shown in this paper, technically, we have also put this into code, is that you can actually make a payment fully anonymous. So I'm not talking about private, I'm talking about fully anonymous, and at the same time ensure that it is below a certain threshold. So what we basically built was a system that says, define a threshold X, let's say it's 1,000 euros, and I will be able to make a payment of less than 1,000 euros. If I want to do more, I basically have to share my data. And I have seen now that in the newest progress report of the ECB, at least this has been considered as one option going forward, and that's already a huge success, I believe, because 1 year back the communication was totally different. And I think long term, at least, we should try to achieve to have true digital cash, including all the characteristics that cash has today.
Susan.
I was basically.
May I add something?
Well, Susan's just going to say something, and I'll come back to you in Frankfurt.
Okay.
I was going to make the same point that you could, one of the great characteristics of digital money is that you can program it to achieve certain goals, and putting limits on it can achieve privacy. This is also talked about, to jump topics just slightly, with respect to financial inclusion. So theoretically, if you wanted to bring people into the banking system who are wary, who are concerned about government, you could, if you limit their access, like the amount of digital currency that they have access to, perhaps require a slightly lower level of AML KYC than you normally would. So I think there are different ways to calibrate this to achieve goals of privacy, anonymity, financial inclusion, like.
Heike.
Yes, I listened to Alex, and he was quoting his paper with zero knowledge proof techniques. That is something, yes, but we are not. It is not the idea that we will base the digital euro on these kind of techniques, because that is something you have to make a difference between just doing a proof of concept and introducing something for more than 300 million people. So there is a difference, and the aspect of keeping some privacy on a certain low value transaction is something else, and that we are also thinking about. But that would be that you will not make it necessary that low value transaction, for example, fall under the AML rules. This is something for which we need the legislator to have to adopt the regulation a little bit. But this is also under discussion, under consideration at the moment.
Okay. For those that don't know what zero knowledge proof is, I've said that right, yeah? It's basically a program that allows you to check something to see whether it's true without having to know it for a fact. Yeah, that's a fair way of describing it, Alex?
Yeah, absolutely. It basically enables you, and then I make it now really tangible, it enables you to prove that you have made a payment and you have stick to the rules. And that's the only thing you're showing. You don't have to share your name, the time of your transaction, the amount. You just have to sending to the central bank a proof, I have stick to your rules. And I fully agree with Heike. If I was a central banker, I would have done exactly the same. I wouldn't have built the first version of the digital euro based on this concept. The only thing I'm saying is, let's keep it on the table. Who knows what happens to cash 10 or 20 years down the line? And if we believe that true anonymity is an asset, we should have something like this on the table.
Okay, all right. Something for food for thought there. I want to get into the topic of programmability. I mean, we already have something called stable coins out there right now in the crypto market. And for those that don't know what that is a digital asset that's pegged to either a reserve of financial products that are very liquid, that can be sold easily, or a national currency. And that's become a little bit of a safe haven, as well as the method of liquidity inside of the crypto market. Oriol, I just want to jump to you right now. I mean, can you tell me why you think stablecoins might still have a role in this world where we have lots of CBDCs?
Well, I mean, You know, you define very well what a stable coin is. And I mean, it's true, even though most stable coins are pegged to the US dollar, which is one of the issues so far. But leaving that aside, I mean, I guess that perhaps stable coins could grow that much because there were no CBDCs. I always say in my conferences or whenever I teach about CBDCs that CBDCs are not cryptocurrencies, which is true. But then we have stable coins, which are like somewhere in between, no? Because many of the functions and ideas behind stable coins to some extent overlap with those of CBDCs, even though, of course, stable coins are not launched by central banks, so they are never going to be the same. I mean, the future is hard to predict, no? But in this sense, for example, I was chairing the Digital Private Euro Working Group at the Digital Euro Association. And what we did in there basically was come up with a report that it took us like half a year to prepare. I was chairing that group, but it was full of well, very interesting contributors who spent a lot of time with research. And basically the idea was to come up with some kind of recommendations, no? In Europe. I mean, we will focus this paper on Europe. Now that we are starting, to see this coexistence between CBDCs, digital euro in the future, stable coins, and well, whilst this paper is of course very interesting and you can all read it online, I mean, some of the recommendations we came up with were that stable coins should be clearly defined and categorized in order to develop a regulatory regime that fosters greater development. The use of the potential digital euro should be encouraged as a reserve for stablecoins to facilitate an easy exchange between digital euro units and stablecoin private actors. Exchangeability should be ensured by providing a common framework for various stablecoins. Public education should be developed to educate the public on stablecoin benefits, uses, and risks towards greater adoption. So, and there are many more recommendations. But if you ask me, like, will the rise of CBDCs necessarily imply the death of stablecoins? I would say no, because even though they overlap in many ways, they still have many differences. No? So I don't think one implies the death of the other. But of course, I mean, it will need to be seen to be followed because, to be honest, given that so few countries have actually launched CBDCs, it's way too early to know how they will coexist.
Okay. I mean, let's jump to you, Alex, here before I jump to Heike. I mean, I'm curious to get your view as an investment banker, how the sort of dual purposes of CBDCs and stablecoins can work together. We're talking about how the sort of crypto technology of decentralized finance and the programs that facilitate or automate transactions called smart contracts. I mean, more than anything, stablecoins are being used for this. Can you just talk me through how you think the two can coexist?
Yeah, so I'm a very strong believer that going forward, we are going to have different forms of money as we already have today. We often don't realize it, but we have cash, we have money on our bank account, then there's this central bank reserves we have already talked about, and all these different forms of money already today address different use cases. And it will be even more so in the future because we have now an additional layer of complexity because there's a whole new there are new technological rails called blockchain, which actually enable us to address even more use cases and do more things. And one of these things is this programmability. It's totally open if a CBDC, in particular the digital euro, will be on a blockchain. I think, in my personal opinion now, the probability that it's not going to be on a blockchain is higher than that it's going to be on a blockchain, which means we are going to have a CBDC that is account-based. So a CBDC will be quite far away from a stable coin, which is, of course, a token-based, blockchain-based form of the euro. And so it's very easy to understand why these two should coexist, because you can, of course, do different things with a stable coin, which is token-based, than compared to an account-based CBDC. So things you can, for instance, do with a stable coin or a token-based form of money is you can integrate it very efficiently and easily into these smart contracts you have said. And the programmability actually comes from these smart contracts. So I can very easily and flexibly write a short program that says whenever it rains more than 2 liters per square meter in Brussels today after 6 p.m., please make a payment from account A to account B. That's very easy with a smart contract. It's quite cumbersome to do it in today's system. So there are certain things I can do with a stablecoin. I can also do micro payments, nano payments, and these kinds of things. And there are certain things I can do way better with a account-based CBDC. So I totally see them coexisting going forward.
But can you explain to me and the audience why is it without the blockchain or a digital euro on a blockchain, why can't you program a digital euro in the same way?
So the question is always where does, so the programmability comes through the smart contract usually, and the smart contract sits on a blockchain. So the question is probably not can you program the CBDC versus the stablecoin, is how can I connect the program that contains the programmability, the code, how can I connect it to the means of payment I'm using in order to actually trigger the payment. And actually both is possible. So I can write a smart contract that sits on a blockchain and make an off-chain payment. And Heike has even mentioned that before, these bridges or trigger solutions where I can have a payment that's triggered from a blockchain and I make this payment via target tips, whatever. But of course, there you always have the friction because you're leaving basically the DLT, the blockchain ecosystem, and you have to build a bridge into the existing ecosystem. For instance, what you can't do with the existing ecosystem, I cannot send you less than a cent. That's just, if I have a use case where I need to send you, let's say in 1 minute, I want to send you 100 times less than a cent, that's not possible with today's system. So this is, you have just a bit more flexibility, a bit more, it's easier to implement conditions into a blockchain-based payment than an off-chain payment.
Heike, is there a risk that you're creating a product which is already outdated?
As I underlined, we are working on it, and the probability about the probability whether it will be token-based or not, the digital euro, I'm not the one who will speculate, but I can just underline that we understood the important use case for, let's say, the future-proofed work, the future-proofed use case with putting money into smart contracts. And we as Bundesbank, we always underline that it's very important doing such a retail CBDC that should be also available to be programmable in the sense that it can be integrated into smart contracts. We know that is something also the German industry is requiring for this, and so we try to influence things that we can offer a future-proof digital euro, which would be token based.
All right, cool. Susan, I'm going to jump to you right here. I mean, we've been talking a lot about how CBDCs and stablecoins coexist together, but I mean, under this, there probably is also a battle between the different types of denominated values that are pegged to each stablecoin. So you would have a dollar stablecoin that we've talked about. We're talking about the euro one here. There's the digital yuan. I mean, can you imagine that central bankers around the world would be totally cool with stable coins that are denominated in the dollar or the yuan proliferating in Europe?
I mean, I think the answer there is no, and I think we saw that play out in the last stages of MiCA already. But I do think that your point, I mean, a secondary piece of work that's embedded in this is making sure that all of these different currencies can work cross-border and can be used interchangeably. At the end of the day, no economy, US, Europe, China, does itself any good by becoming a walled garden, if you will. And I think that is one of the challenges as different economies consider how to develop these and design these and how they are going to work with each other. And can they work with each other? Is that the intent?
So central bankers should chill out?
I mean, I will defer to Heike.
Okay, all right, okay, we'll defer to Heike. Heike, do you have a reaction?
Yes, it's not a new requirement that CBDC should be interoperable with each other, and that central banks should find a way. And might be you have followed the BIS. They are in this forum. We have a lot of discussions, and there is a lot of work. What they have done already, it's of course I can't deny it's a challenge because we mentioned that there are some CBDCs in the market, but those are in let's say more small economies, Bahamas, East Caribbean, Nigeria. Nigeria might be not that small, but not in the let's say in the high industry countries, industrialized countries like US or yes, Germany, France, Japan, etc. And we have to because interoperability has to be organized. And at the moment, we have only the Eurozone working really on a digital form of their currency. Then we have the UK and the US who are in a let's say in a former stage, and also Japan is not that busy with that because they have I think they have they are on the way more to a commercial bank digital currency, but so the levels are different, and it's a quite complicated way to have an agreement. But in general, about the way interoperability can be organized, there are some papers of the BIS. You can have it bilaterally. You can have it on a platform, for example, and so we started the discussion.
For those that don't know, the BIS is the Bank for International Settlements, or the central bank of central banks. I want to get into the sort of looming risk of a digital currency wars. I mean, forgive the Politico style of looking for sensationalist headlines. I'm sure that you're all familiar with it. But one of the fun things about my job is that I can follow Eurozone finance ministers whenever they then meet up in a so-called Eurogroup, which is an informal body where the press are not allowed to sit in and listen in. Thankfully, we have people who tell us what's going on in there. And it's several times you often hear the French finance minister, Bruno Le Maire, and when Olaf Scholz was a finance minister, they would often in these Eurogroups sit there and worry about how far ahead China was in or is in developing a digital yuan. So Oriol, I'll come back to you here. I mean, should finance ministers worry that China is so far ahead, or should they also chill out?
Well, I mean, I cannot say whether they should be worried or not. All I can say is, I mean, we all know that CBDCs can be designed for several purposes. I mean, they can be designed for promoting financial inclusion, for making payments more efficient. I would say that one of the main goals behind China's digital yuan, even though it's never been admitted like that by themselves, but I think it's pretty obvious, is that of trying to make the yuan become a much more internationally used currency. We all know that the yuan's internationalization has been hindered by the lack of full convertibility of the yuan so far. I mean, this is a fact. We also know that a technical upgrade may not be enough per se to make a currency become much more used internationally. But China has been making some very interesting movements in this area. I'm not saying by that the yuan will, beat the greenback, beat the US dollar in international trade overnight or anything like that. I mean, there's still a huge difference between both when it comes to the use in international trade. But it's undeniable that China has been thinking about that when designing the digital yuan, because I mean, let's face it, in a country like China, where people are already so used to making payments using WeChat Pay, Alipay, adding a digital yuan, adding a new electronic means of payment, perhaps it was not that necessary from a domestic perspective. But I would say that China has been working on some movements. For example, just to summarize, China, as you know, a few years ago, promoted and is still working on the idea of the Belt and Road Initiative, which, as you know, includes many countries in Central Asia and other regions of the world. So this could be a great platform for China to try to internationalize the yuan, to promote payments using the digital yuan, as long, of course, as the right infrastructure is in place. Then China signed as well the RCEP Free Trade Agreement, Regional Comprehensive Economic Partnership, which is a free trade agreement that was signed exactly 2 years ago, on November 15, 2020, and which basically will include a 30% of the world's total GDP and total population. So as you can say, it creates or will create a huge free trade area that China can use as well to try to internationalize the digital yuan. China, as you know, is very active on signing deals in Africa, on investing in Africa. So they might try to promote the use of the digital yuan in there as well. China signed a joint venture with SWIFT a couple of years ago, or 1.5 years actually, in order to try to make the yuan become much more internationally used. And China is as well working on this interesting, technically speaking, blockchain service network, BSN, which is a according to its own name, no? A blockchain network that will allow, theoretically, I mean, it will allow for many things, but it will allow as well for, I think, the internationalization of the yuan, because as you all know, I guess, China is very blockchain friendly, and that's very important to remember. China said no to cryptocurrencies. China adopted a very tough stance towards cryptocurrencies, but at the same time, China is very CBDC friendly, of course, because they are very advanced with the digital yuan, and they are very blockchain friendly as a technology as well. So it would be yes to blockchain and no to cryptos. So going back to your question, I mean, it's hard to know how international digital yuan or the yuan will become thanks to digital yuan. I mean, it's hard to know, but we know for sure, we can see that there are some movements made in this area.
Okay, no, thanks for that. I mean, the Europeans have been very, very vocal in their bids to sort of beef up the global presence of the euro, and the digital euro might then also help them in that. We've just heard now, for instance, that the digital yuan could help facilitate China's footprint as well. I mean, Susan, do you worry that we're heading into a kind of arms race on this?
I don't. I think it makes sense that the EU would want a strong euro. It makes sense that the US wants a strong dollar. And I think that much of this, I think what I'm encouraged by and what we should keep an eye on is the level of international coordination that is already taking place, through the FSB, through the BIS, through different convening bodies where all of the finance ministers and the people in charge are having these conversations. But I think that this sort of conversation and tension is natural to be expected, will encourage the development of new technologies and coordination, and we'll see how it plays out. But I think it's healthy at the end of the day, not a detriment.
Okay, Alex, is it healthy, or I mean, I'm just curious. Like, are the Europeans kind of wasting their time and thinking that a digital euro could somehow kick the king dollar off of its pedestal?
So only because we put the digital euro on a blockchain or kind of make it available more easily doesn't make it the world reserve currency immediately. I think that's something that's important to understand. And coming to your question, is this going to be an arms race or a global currency war? I think we already have this. War is probably a bit of a strong word, but this arms race is existing already. And what these CBDCs are now doing, they are just adding one tool to the tools you already have. And this is going to be probably important going forward, but it's not going to be the deciding factor. There are many other things to being a world reserve currency, which starts with making your currency freely convertible. You need strong institutions, rule of law, and these kinds of things. So I would not overinterpret the power of now issuing a CBDC and becoming the world reserve currency.
Okay. Heike, is the digital euro going to be a bazooka in the Eurozone policymakers' ammunition kit?
No, the word bazooka in this context, I think, is a really wrong choice, because I think all those the Eurozone central banks, they are very careful, and as well as I think the other G7, because in the G7 we have made a paper to agree on some principles on how, in case if CBDC will be put into circulation, and there's the principle do no harm and don't touch the financial stability as such, and also be so this wouldn't fit all to what you quoted here as arms race. So I think yes, and I have also to stress what Alex said. It's not only the form of a currency which makes it attractive. There is much more behind that. Some economic factors of that will make people decide whether they take it as a reserve currency or not. And I think this, is not something we will change with CBDCs.
Okay, great. We're coming to a close, and there have been a couple of questions here about how the digital euro would actually be good for EU citizens. So I hope everyone else will forgive me that I give this question to Heike, given the fact that she's one of the people who are helping build this thing. There was a paper recently from staffers at the ECB. This is not an official position. It was simply a working paper that they've been working on. And they said that there was a risk that the central banks are putting so much effort into appeasing the banks to making sure the digital euro doesn't hurt them enough, that they're ultimately forgetting about the benefits that the digital euro could have for the average Joe or average Hans, whichever anecdote you'd like. Is this a risk? Are you being too careful about appeasing the banks?
At the moment, I'm not that sure that, because the banks at the moment complain a lot that they don't feel sufficiently involved in the whole project, and that is what we try to improve. And for that reason, I think we are not in the stage that we can say we take too much care about them, or that is not their impression. Nevertheless, we do, because we are at the moment, because it's a really new thing, the CBDC for retail purposes, and there we are working everything out in detail how it could be, and there is nothing like, there is not a real role model for that. And so it's at the moment a lot of work behind the doors, but we start now the discussion when we have figured it out a little bit more for us, that we can present some proposals, and that is what we are doing now. And I don't, yes, let's see whether that work, but we really, yes, would like to have the banks to be constructive and try to develop a new kind of payment method that will be, yes, useful for the end users, and yes, well, and quite popular, and should be also useful for the issuers, the banks, the issuer behind the central bank, but that is not that much in the focus, but also for the users, which are the merchants as well as the end users as consumers, for example.
Bjarke?
And
Sorry,
if it's really quick.
Yes, I will just say that I think what's been really encouraging is that banks, the Fed, the Bank of England, the ECB, all of them have really emphasized public-private partnerships. And I think taking into account private sector views, including from the general public in terms of how to construct CBDCs. So I would just note that I think there actually has been a lot of engagement in terms of trying to figure out how digital currency could impact the general public, taking into working with the public in terms of what they're doing.
Happy days. With that, I wish everyone, thank you all very much. I'm going to first thank Heike from Frankfurt and Oriol from Barcelona, even though that's Hong Kong in the background, it looks like. But nice to know that you can be in two places at once. And here, Alex and Susan, please, ladies and gentlemen, give them a warm round of applause. Thank you so much.